Recyclico, making lithium-ion last forever. Recyclico's patented recycling process achieves up to 100% recovery of battery metals from lithium-ion batteries for electric vehicles, including cobalt, lithium, nickel, manganese, and aluminum. Recyclico Battery Materials Incorporated trades on the TSX Venture AMY, on the OTCQB AMYZF, and Frankfurt ID4. For more information, visit recyclicode.com or phone us at 778-574-4444. Recyclico, making lithium-ion last forever.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is market historian Bob Hoye, the chief investment strategist for chartsandmarkets.com. He's speaking to us from Vancouver. Welcome back to the show, Bob.
Yeah, hi, Jim. Always good to get together with you and our listeners on a Friday morning in Vancouver, and this is a very pleasant Friday morning in Vancouver.
Some of the headlines that caught your eye today. Chapter 11 filings by businesses soar 61% so far this year. What's going on there, Bob?
Oh, that means their Chapter 11 is Chapter 11 bankruptcies, a certain designation, and a 61% change. I guess. Oh no, so far this year.
Yeah.
Hey, that's a major number hit for sure. So, yeah.
Midnight Massacre. Tesla slashes prices yet again. And I was just reading some headlines that their market share in the electronic vehicle space is shrinking.
Right. Yeah. Do we dare say shocking?
Electrifying.
Galvanizing. Yeah, the people are discovering that electric vehicles are kind of faddish and as represented as being pure, they're not. You got to mine a lot of bad stuff in order to make the things, and then their batteries blow up, and then you got to dispose of the things afterwards. And people are finding that they are truly very expensive. And then also, government's going to be running out of money to subsidize these things. So, yeah, I think the electric vehicle phenomenon was a wonderful fad, and I think it's over.
Well, of course, you take a look at what it takes to fuel up your vehicle. In Canada, a good portion of that fuel price is taxes.
Oh, yeah.
Yeah, whereas if you use electricity, you don't have all those extra taxes added. But yeah. I can predict very clearly, although nobody in government has said this yet, but you know it's coming, there's going to be road pricing. In other words, what's your odometer reading today? A year from now, what is it? And we're going to tax you on that. Yeah. So while you may only be paying a tenth of what you did in fuel prices, you're still going to end up paying those taxes. Governments are very hungry for those.
Also, when taxes were first put on gasoline, they were to design, build new roads, and maintain old roads and bridges. And the money was slotted for that. And then after a while, somebody says, oh, why don't we put it into general revenues? And this is now why you have roads deteriorating and bridges falling apart, because the road money goes into general revenues.
Headline, Wall Street is worried the bear market has unfinished business. What does that mean?
I kind of like that. It's not over yet, boys. There's unfinished business in the process out there. Yeah, and I agree. The bull market for senior stock index peaked in January 2022 and is still going down.
Headline, Wall Street isn't sure it can handle all of Washington debt.
Oh, yeah. And it can't. It'll take a crisis to turn off the political ambition that is, that creates all the debt. So, and I think that there will be enough crisis around to kind of hit the markets bad enough that the whole thing goes into a contraction. So, yeah.
Headline: Distressed debt anxiety is spreading across emerging markets.
Oh, yeah. Yeah, the emerging debt sector is in deep doo-doo, and it's not over yet. And the way it goes, Jim, is that, first of all, emerging markets get into trouble, and then eventually it hits the senior market, which is New York. I mean, London is still a very important market, of course, so it hits the senior markets, but it starts in the lesser markets first. So,
well, this is where you get to quote Marcus Tullius Cicero.
Oh, yeah. Yeah. Well, he said that some 2,000 years ago, that if you get a problem in the financial markets in the eastern Mediterranean, like Phoenicia, and the Mediterranean Ocean then existed for trade. You know, thousands of little ships going from port to port for trade. And he did point out, if you have a problem in the eastern provinces, it will eventually hit Rome. And that's such a wonderful observation. Of course, this is what we've known since, that it starts in the lesser exchanges and then eventually gets to the big one.
And two headlines from China. Evergrande investors warn of uncontrollable collapse, and China's largest private developer, Country Garden, warns of default. Yeah,
those two guys. We've been following, first of all, Evergrande for a long time, and then along came Country Garden, and it was fascinating to discover that headline describes Country Garden as the largest private developer. So, you know. Yeah.
When China's real estate industry collapses, what happens to China?
Well, the communist government in Beijing has been living the good life because they got lots of tax revenues coming in. And then the tax revenues will disappear, and there'll even be austerity in government circles. And so, yeah.
And one wonders where China really does get their money. A friend of mine who was working there said no matter how much he made, it was $8 a month in tax. And, of course, if you have 1 billion people, you're bringing in $8 billion.
Whatever.
Yeah. But he was surprised at how low his tax bill was, even though his income had gone up dramatically. Maybe they get you later somehow.
Yeah.
We'll dig into gold right after this.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Bob Hoye. We're going to take a close look at gold, beginning with a listener question from Michael. Bob, is high inflation and geopolitical instability good for gold but bad for gold miners?
Yeah, that's a good question, Michael. But it depends what's going on with the U.S. dollar. And the U.S. dollar has been quite firm. So and I think it can continue firm. And the reasoning for that is that when this contraction gets a little more severe, the really careful money, and there's big amounts of careful money out there, they go to the most liquid items, and one of them is gold, so that puts it a bid in for gold. And the other very liquid place to go is U.S. Treasuries, shorter than 1 year. So that puts a bid in for the U.S. dollar. So I don't see any huge change in gold's price in dollar terms coming up, mainly because of this reason. And the other way, then this is where I've stepped into the unusual way of analyzing gold, which is to look at its real price. And usually at first cut, that means gold relative to the CPI rate of inflation. And I, ages ago, did all the computations all the way back to 1700. And it was 1720 was the first great financial bubble. And gold real price declined in the bubble and went up after the bubble. And it went up for so long as the depression was on, which was usually, around 2 decades kind of thing, with the business cycle going up and down in between. So here we are in our great bubble. Gold's real price did go down, and it's been going up more or less since. But I've taken and compared gold to a commodity index, the CRB, and argue that gold divided by the CRB is gold compared to the costs of mining. And then you can get a little more close in on that with gold divided by crude oil. And in any mining operation through to, finished ore, it take about 60% of the costs are energy related. And of course, crude oil is energy related pricing mechanism. So last year we did have a good rally in gold divided by commodities, and also it tied quite well with the rally in the, say for example, the GDXJ. And it also, you had the same rally, even more so, for gold divided by crude oil. And then the whole thing got overbought. I think it was last April, May, which we noted. And then this is the reason for having kind of special conversation about gold now, is that from that high in April, May, we then thought the natural low would be in October. And also we had a couple of other techniques for confirming that probably October would be an ideal time. So now for this, you need to have, if the sector's not oversold when you're expecting the low, hey, the trend might continue down. But if the sector is oversold when you're expecting the low, chances are you're going to have a bottom, or a bottom forming, which is what we're getting. So whether it's the GDXJ or the TSE Venture Exchange, getting lows, and there's also some technical excesses building, saying that this is beginning to get pretty oversold. So, hey, it's the ideal condition. So our Thursday piece actually did bump it up to say to begin accumulating gold stocks, whether you trade big ones, middle-sized ones, or junior exploration stocks. It's time to begin accumulating. And veteran traders on juniors, they kind of wait until December when tax loss selling comes in. But I think the opportunity is now. So let's put that in, that begin to accumulate gold stocks and looking for terrific rallies following. And it'll be guided by gold divided by commodities and gold divided by crude oil, and it works wonderfully well. So this is where the whole sector, Jim, begins to change. Ever since the 1960s, I guess when James Dines was one of the early loud voices on it, was that the U.S. dollar would go down and gold would go up, and you buy gold stocks on that. But that is speculating in foreign exchange transactions. But the way I look at it, with going to gold divided by commodities or crude oil, it's a proxy for earnings. So if you've got a forecast where earnings are likely to be rising, then buying a position in gold stocks becomes an investment. It's no longer a speculation on dollar down, gold up. So then you could look at what some young hotshot fund managers, equity fund managers may do. So if they see a couple of quarters where the GDXJ has outperformed the S&P, they got to be in the play. So there's a whole new ball game coming on out there of the markets discovering that gold stocks are an investment because of rising profitability and rising earnings. And the very thing that happens, like when you've got a weak copper price, you're not going to buy copper stocks. They get trashed. And that same thing for the whole CRB, with all of the commodity prices being weak. It means that industry and business is generally weak. And you can put together a chart of CRB with S&P earnings, and there's a correlation there. So it gets into a new post-bubble world whereby the gold stocks do become an investment. So, yes, you can argue that buying gold stocks against rising earnings is an investment. Okay, now what about a gold stock that has a junior that is exploration in the field or comes up with a discovery? There's no earnings there, but the valuations that would be used to determine a potential property, a potential mine, are enhanced as well. So this is where it feeds right down from the seniors right down to the junior exploration companies. So it's going to be, Jim, it's going to feel so good to have a real solid bull market going for gold stocks. But it could be a little lumpy going into it, and that's why, one, we were looking for a low in gold stocks in October. We're getting that. We're also getting some oversolds. Thus, the advice is to begin accumulating and to have, maybe by a year end, a very good position, a representative position, because after that, the whole game should get going. So we're very bullish on the gold stocks.
Now, Bob, I don't know if you care to comment on this. Canada's Supreme Court rules federal environmental laws largely unconstitutional when it comes to assessing impacts of things like pipelines and developing mines. The Supreme Court has said mining is under provincial jurisdiction.
Oh, yeah, this is outstanding.
Yeah. So, because I know you don't like big government interfering with reasonable business.
Right. No, but this is a court. The Supreme Court
Supreme Court of
decision
Canada. Yeah.
That in this case, it's in the hands of the provinces. And, of course, you see often Danielle Smith, the Premier of Alberta, just having struggles every week with Trudeau, who really wants to shut down the whole oil and gas industry in that province, and also any other province that's got oil and gas as well. So this really will stymie Trudeau.
Yes, the Taxpayers Federation called this legislation that was mostly struck down as the No More Pipelines Law. And they were one of the interveners. Business entities, for the most part, are applauding this court decision, using words like ecstatic and thrilled.
Yeah. Oh, no. This was really important, and I'm glad you brought it up. Yeah, because I did look at that headline earlier today. And, yeah, that's a very important step. And actually, Trudeau was just a puppet on shutting down resources in Canada. He basically is the agent for the World Economic Forum, the WEF. And how do I know this? A dear friend of mine's nephew, David Morrison, about 4 years ago, was appointed as special advisor to Trudeau in the Prime Minister's office. And about 20 years ago, David Morrison spent 5 years in Geneva as a director of the WEF. So this is where, through question period in the House, where Pierre Poilievre has been a very effective leader of the opposition, would be grilling Trudeau during question period on the soaring cost of living, hardship, and everything else. And then Trudeau would get up and mouth, oh, but we have to save the environment, and we have to save, and that's the carbon taxes are going up, and we can't have this CO2 and all that nonsense, is because he's just a puppet of the World Economic Forum. And, you know, Klaus Schwab's statement is, you will own nothing, and you'll be happy, because we will be running your life. And that's what these idiots at the World Economic Forum are doing. It is just absolutely astounding. So this then gets me to one more definition, and that's the definition of fascism. And the most elegant definition is that fascism is the combination of big government and big business. Now, what is the WEF? Well, there's 1,000 major corporations behind it, funding it. That's big business. And how do they employ their ideas? Through big government. So this WEF is pure fascist outfit. But again, I think going into a post-bubble contraction, the money's going to disappear, and the folks are going to say, hey, no more intrusion in my life, no more taking my taxes to tell me what I don't want to do. So it's going to be interesting.
Yes, Alberta Premier Danielle Smith said Alberta wins, Canada wins, and all the businesses, again, that were impacted by this, say it gives them much more leeway to go ahead with. Let's face it, Canada has some of the greatest natural resource deposits in the world, and this law basically would keep everything in the ground, and you would like it.
Yeah. Yeah. Well, just imagine if they had been able to proceed through the last 5 years of building natural gas pipelines and exporting compressed natural gas and all that sort of stuff. And it's a very pure form of energy. It's a wonderful thing, but Trudeau is against it and on his own personal passions. And, well, actually, as instructed by the WEF. So,
yes,
anyways.
And Stuart Muir from the Resource Works Society pointed out one of those natural gas carriers is worth about $100 million in revenue to Canada.
Wow.
Each one that you get out.
Just one carrier.
Just one.
Yeah.
And they expect one a day will leave Kitimat once that project's done.
Yeah.
Yeah. So,
outstanding.
Yes, and I'm sure, would you rather have China have natural gas or build more coal-fired plants?
Right.
Right. There's the decision, folks.
Yeah.
Because China is switching to EVs, whether the people there want it or not.
Yeah.
But they all still smoke like crazy, so I don't know how much they're helping their internal environment.
Yeah, puff, puff, puff that cigarette until you puff yourself to death. There's St. Peter waiting at the Golden Gate, and you don't want to make him wait. There was a song from the 50s.
Well, my cynical theory is the Japanese government has the tobacco monopoly because they want you to die before you're old enough to collect your pension, but it's not working because the Japanese drink a lot of green tea and the antioxidants are countering the effects of the cigarettes.
Oh, you're getting too much.
Oh, I know.
Is this program finished?
Oh, I think we are, Bob. I think we're toast. Butter us up. Butter us up because we're toast. Bob, thank you so much for chatting with us.
Yeah, Jim, we had some fun today and look forward to next week.
My guest has been market historian Bob Hoye, the chief investment strategist for chartsandmarkets.com. If you have any questions for Bob, you can send them to info@housestreet.com. Our YouTube channel is Talk Digital Network. Find us on X at House Street. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.